Hello, everyone. Thanks for joining and welcome back. Our guest today is my good friend Jeffrey Tucker, the founder and president of the Brownstone Institute and the author of The Market Loves You, Why You Should Love It Back. Welcome back, Jeffrey.
Good to be here. Thank you.
Yeah, it's a huge pleasure having you come down. I wanted to get you down here to talk about everything that's happening in the gold and silver markets, and everything happening in the global economic, world right now. But I wanted to first start off with gold. And what are your thoughts on the new all-time highs? Do you think it's due to tariffs? What are your thoughts there?
It's a combination of a number of things. There's a civil war going on in the United States right now. It's maybe low grade and people don't recognize it as such, but it is a civil war with two very clean sides. One is, legacy government institutions, the public sector, its allies, and among judges, legacy academia and media outlets like the New York Times and Washington Post, which we now know were largely funded by government, with Politico, right behind it there, against a ferocious Trump administration with a public mandate and unleashing Doge on the public sector, and we're seeing unprecedented levels of transparency and a determination to change everything. So that's domestically. We can talk about this a little bit, but Trump, I'm pretty sure, is going to try to submit a balanced federal budget.
Okay.
Uh, Very first thing, and he's doing this because he's never cared about the budget in the past, but now he realizes that there's a symbiotic interest between his personal political interests and gutting the spending, which was largely supported to destroying his presidency last time. So you have this sort of magic combination of a new president with a mandate on a rampage through the public sector. I think it's going to hit everything. It's going to hit the Pentagon. It's going to hit every agency. I mean, they're desperately trying to get everybody to resign. They've achieved it with something like 2%, could get to 5%, maybe 10%, depending on how things turn out this next Monday. But we've never seen anything like this. I would say like in 100 years, or even you have to really go back to 1800 to see this level of
Wow.
upheaval going on. So it's very serious. We're finding out about everything. There's a scandal every minute is pouring out about this censorship, who got paid what. NIH grants to universities just got cut. The universities used to take a 65% fee from
Uh-huh.
every grant from NIH. That's just been dropped down to 15%, which is going to bankrupt universities all over the country, which is just
Wow.
glorious. But anyway, this is playing itself out in daily matches between random federal judges and Doge, which is raiding office after office and releasing data as quickly as it possibly can to its friends in the independent media. So Doge and the Doge MAGA Maha coalition, the insurgents have the overwhelming support of the American people, but they're going up against a ferocious Goliath of all the institutions
Right.
domestically. So, I mean, like you might say, well, how's this going to turn out? It's never going to end. I mean, it's good. It's never going to stop. I mean, this is your every day, every hour, every minute for the next 4 years. So, if you want to stay sane, you can, unplug and go chill. But actually, a lot of us care about civic affairs, and so we're on X, as much as we possibly can. So that's domestically, and let's just leave aside the macroeconomic conditions for now, but I want to get back to that. Internationally, we're seeing the complete breakdown of the neoliberal order as it got forged into place in 1947, 1946, 1947.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metal storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
Going back to a sort of a nationalist trade blocks and the use of tariffs and tariff threats as a
Right.
tool of international policy. I'm pretty sure that Trump's going to pull out of NATO. U.S. funding of everybody is coming to an end. And the U.S. is going to try to restore its a manufacturing place in the world, which I think is not going to happen, actually, to tell you the truth.
Why is that?
Well, because the reason the U.S. manufacturing has been gutted, for all these years, for the last half century, and every area you can possibly imagine, from textiles to steel to textiles and
Automobile,
employees
yeah.
and shipping and cars and tools and everything, watches, whatever, pianos, is and furniture is because of the value of the dollar internationally. It's a matter of math. Accounts never settle, and so as a result, every country in the world can compete with the U.S. on wages and production costs. And and that's just because every country, every currency in the world is undervalued and the dollar is wildly overvalued. And that's because it's been providing liquidity to the world. Trump is under pressure right now to understand this a little bit better. That we're going to have to accept a lower exchange rate for the dollar in order to fix American manufacturing. So Vance, I know, is trying to convince him of this. He doesn't like it because he thinks strong dollar means, a manly thing or whatever. It's not correct. But he's trying to, if you read the reports of the new guy who is the chairman of the Council of Economic Advisors, he wrote a
Hmm.
a paper I just linked to earlier this week. Is very interesting. They're trying to fix this problem of the math and the non-settlement of the accounts revealed, of course, in the trade deficit through the proxy of tariffs. Which I don't think anybody has ever really tried before, and I have serious doubts that it's actually going to work. I don't see how you can rebalance trade accounts with tariffs. The tariffs just end up being taxes. So I think, yeah, this is in many ways the weakest part of the Trump administration. Um, and it's a highly speculative theory they're going off of, but Trump believes in it, and they're gonna try it, and we're just waiting to see how much damage it's going to do. But anyway, these hard metals, gold and
Right.
silver resources in general, become more valuable under these conditions. Now, domestically, we're looking at a very interesting economic situation because, as you and I have talked about for a very long time, the economy is nowhere near as strong as the data have suggested for
Yeah.
the better part of 5 years. I don't believe we ever really entered into a path of recovery after lockdowns. You can see this with fundamental labor data like labor participation and once you adjust things like factory orders or usually retail sales or anything else for the CPI, you'll see that it's been flat for 5 years. So the recessionary conditions have been with us for a very long time,
Right.
which in a way kind of helps the Trump administration right now because any evidence of output growth at all is going to be felt very strongly. We saw the labor report, the first sort of honest labor report in 5 years, come out 2 days ago, where they revised downwards all job creation from 2024. So, about 600,000 jobs just disappeared from the rolls. So we know now the Biden administration was gaming everything. We've known this for a very
Yeah.
long time, but here's the proof. It's right there. Now, the inflation situation is interesting because, for whatever reason, and I'm not arguing cause and effect, but it's just a reality, inflation has been going down in real time ever since the inauguration.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. keep stacking.
I know that
Why?
sounds it sounds nuts, right? But it's down now near target levels. It's running at about 2.1%, which is pretty darn low as things go. Um, I think this might reflect a fundamental change in velocity. So the lower the velocity, the less inflationary the printing becomes. Just simply, it's just like the low velocity implies that people are just saving more and spending less. They're, putting the new cash in their mattresses or whatever. So
Right.
a lower velocity is going to reduce inflation levels. And I think that lower velocity, we started seeing evidence of it in the last quarter of last year. And we don't have the data yet, but I think we're starting to see this. So I think maybe the reason for this is that when inflation is high and people expect it to get higher, that can have a funny effect of causing velocity to increase. And why is that? It's because you want to get out and shop before the prices get higher.
Right, right.
So that's why you get into this sort of this cycle, inflationary cycle where the expectations feed into the inflation feed into the expectations. And at some point there's no turning back from that. But the same thing is true in reverse. You can reverse this cycle when people expect inflation to go down, then you suddenly get a fall in the velocity of money. People tend to save a little bit more. They spend less, and now we're starting to see, sure enough, cultural movements like no spend 25, you cut your spending, let's save money. And there's a reason to do this if you expect that inflation's going to be lower, and everybody expects it's going to be lower under Trump. So a fall in the velocity of money feeds into this.
Right.
So I, I think we might, in a funny way, have turned the corner on the worst of it. Of course, you don't know, depending on what Fed policy is going to be in the future. But for now, it looks as if we can forecast out 6 months and say, that the worst of it is over, and we might be able to avoid a second wave that you and I have worried about for a very long time. The other factor is if Trump is really successful and dramatically, in submitting a balanced federal budget that takes pressure off the Treasury for the debt creation and ends the export of dollar-based assets all over the world that are being used to compete with American manufacturing. So through a circuitous way,
Right.
it might actually help the problem with the trade deficit too, just by eliminating the government deficit at home. So in that sense, I'm not. I think the Trump administration is in a good place right now, especially if they get a good tax package through and actually submit a balanced budget and deregulate at the same time and got the public sector. We could be poised for some pretty interesting growth. We've got a long way to go to make up for the
Yeah.
hell of the last 5 years, but
Oh, yeah.
but I think it could happen. Yeah.
Yeah. And what do you think it could turn to deflation or no?
No, no, I don't think, and really, I mean, there should be zero concern. Look, I've thought about this a lot. I'm trying to imagine scenarios under which deflation becomes an issue. I can't really see it. We're going to see some pockets of commercial real estate still, going through a change in valuation
Yeah.
based on work patterns and otherwise, and also keep a close look on residential housing prices in Northern Virginia and the DC area, because if we really are starting to see a gutting of the public sector, we're going to see a lot of demographic movement out there. So that'll be the proof right there that something serious is happening. But that kind of deflation it's going to be regional, it's going to be urban, and it's going to be sector based, but it's not going to be a general deflation. I can't see it.
Yeah, you absolutely nailed it, Jeffrey. I'm on the same page as with you. Before you go, I would just love to ask you, where can people connect with you, and what's your last piece of advice for people right now? With all this turmoil that's happening in the economy and people trying
Yeah.
to save themselves, what's your advice to them?
Well, I love this no spend, don't buy 25, now's the time for saving. I'm not I'm not bearish on stocks. I think we're poised to do pretty well in financials for a while. Gold and silver are going to be very strong, and of course, with this talk about a sovereign wealth fund, he's gonna pack it with Bitcoin. So there's that.
Right.
Uh, I don't favor this idea, but I'm just saying that that's sort of what it is. I'm posting on X all the time at Jeffrey A. Tucker, and I write for Epoch Times every single day, and I try to write for Brownstone about once a week.
You know what, everyone watching, I really highly recommend you to go follow Jeffrey. I'm going to put the links in the description below. But Jeffrey, such a huge pleasure you coming down, and as the market develops, as always, I absolutely love to have you back.
Okay, pleasure to be here. Thank you. Exciting times.